Will be fine, but in the meantime, of course, you've got these other jurisdictions lobbying, jockeying to try and get the vanguard seat for digital assets, and who wants to be the next digital asset hub.
Yeah, it's competitive.
Yeah.
You're kind of missing out if you don't try and play in the race. So, yeah, I mean, Singapore was sensational.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. Buckle up your seatbelts, because in today's video, we're going to show you guys fundamentals suggesting that hundreds of trillions of dollars are going to flow seamlessly into this digital asset space, and confirm from some panelists from some of the world's largest institutions, Societe Generale, JP Morgan, video clips confirming that they are building out an infrastructure in such a way to integrate into the public blockchain environment when regulatory clarity is there, and that Axelar is playing a massive role in all of this behind the scenes in interconnected webs and partnerships. And we're going to show you all of that in today's video breakdown. So make sure that you stick around for the entirety of it, because we're not going to get into the video clips until the end of the video breakdown, but we will get to them. First, we are going to start here with this fundamental piece. Shout out to the CYPRX researchers, by the way. This one was phenomenal to read. So this was posted by the founder of Tokenization Insight and someone who works at Ondo Finance. And he said here, tokenized money market funds get the green light for $700 trillion derivatives markets. Back in September 2024, he said eligible collateral statuses would be the catalyst to propel tokenized money market funds to trillions of dollars in assets under management. And less than 3 months later, boom, the Global Markets Advisory Committee has officially recommended that the CFTC approve tokenized money market funds as collateral, according to Bloomberg. Tokenization is moving faster than anyone could have expected, and fireworks are coming. The race to dominate on-chain assets under management is about to get fast and furious. I'm telling you guys, they openly talk about this on stage and how they're going to utilize public blockchains for all of this. Okay, this is going to be so massive. So here it says who is leading the pack: Ondo, BlackRock, Hashnode, Franklin Templeton, and Superstate, right? Remember that. We're going to come back to that. But down here, it talks about how the space grew 500% in 2024. And now 2025 is shaping up to be even bigger, which is massive, right? Larger than 500% is crazy to even think about, but it gives you this link to click on. And so if we click on that link, it takes you to this website. It is an updated survey from January 1st, 2025. And if we scroll right down here and just read a couple of highlights, I don't want to read the entire thing. I just want to show you guys how freaking early we are, people. This is so massive, what I'm showing you here. It says, more and more financial institutions will look to develop a suite of digital asset products offering to stake their claim to what many predict to be a multi-trillion-dollar market by 2030. Look at these numbers. All the little tiny green circles are what these financial institutions have. We have literally, I'm not going to read through these. You can see them on the screen. Some of the world's largest financial institutions. And they have either crypto trading and custody, private crypto funds, crypto ETPs, crypto-enabled payments, and tokenization. Okay? Imagine how, and remember, keep in mind that we've confirmed from leading industry experts that if one financial institution adopts these digital assets, all of them must, or risk falling behind.
Will be fine, but in the meantime, of course, you've got these other jurisdictions lobbying, jockeying to try and get the vanguard seat for digital assets, and who wants to be the next digital asset hub.
Yeah, it's competitive.
Yeah.
You're kind of missing out if you don't try and play in the race. So
I mean, I think from our perspective, we are banking the people that are banking those that are in the crypto space. And so the demand has been immense, to be honest. And I think for a long time, especially in TradFi, there was a hesitance to dip your toe into the digital asset sector because of the high costs of compliance and the perhaps question of, was this something that was going to stick? And I think the answer is pretty clear and evident that it absolutely is. And now I think it's more dangerous for the US and for banks to not be willing to invest in it in the right compliant manner.
Right? And so you can see here that we have some green check marks for crypto-enabled payments, and then also some non-green check marks for the rest of these financial institutions. Imagine when this landscape is all checked green, and we know that that is coming. Some of these institutions remain sidelined because of the lack of regulatory clarity. So when that legal clarity comes, oh my goodness gracious, ladies and gentlemen, we are so freaking early to this party. It is not even funny. And I literally just showed you physical proof of that. 2025 predictions, global financial institutions and corporations will continue to broaden their digital asset offering and capabilities. As jurisdictions around the world provide more regulatory clarity on digital assets, institutions will have more confidence and comfort entering into this space. That's all we're going to read from this. Now, remember, if we go back to this post, okay, it mentions Superstate in the number 5 spot, leading the pack at $182 million of assets under management, right? Well, if we go over to the Superstate website, you can see here, this is directly from Superstate, yield for crypto native investors. And if we come down here and look at their Superstate Industry Council, you can see Axelar mentioned. And if we go back to a post from August 2024 from Superstate, they talk about their industry council welcoming a cohort of leading institutions, right? And right down here it reads, since the inception of the council in March 2024, dozens of organizations across the ecosystem have seen the efficacy of the SIC, again, the FIC being the Superstate Industry Council, so that way you understand the acronyms, efforts and sought to join the council. The SIC is proud to welcome 15 leading institutions to our second member cohort. These members, chosen for their diverse perspectives and expertise, focus on areas across both TradFi and DeFi, including trading, market making, custody, prime brokerage exchanges, investing layer 2s, and interoperability solutions. I highlighted that. And you can see right down here, it mentions Axelar Foundation. Now, literally just days ago, look at what Axelar posted. Okay, this is monumental, and it's going to show you all again, when we get into the video breakdowns, that these institutions are telling you guys that this is the way that they're building it on stage. These public blockchains will 110% be utilized. It's not coming from me. You're going to see that it's coming from some of the world's largest institutions. Axelar posted out here, institutions are asking about interoperability. Well, Axelar sits on the SIC, and look at what they provide, interoperability solutions. And Superstate, okay, if we go all the way back to the post where this gentleman here says that tokenized money market funds is getting the green light for $700 trillion derivatives market, Superstate sits right down here as leading the pack right now, okay? And they're projecting that this is going to grow even deeper in 2025. So this is so monumental. You cannot make this stuff up. This is, again, why you need to be paying attention to the rapidly evolving digital asset space, because imagine what this industry is going to look like, what these prices of these digital assets are going to look like right now that are well below $1 when all of these institutions have green check marks next to their names, okay? That's why I'm trying to show you guys that this stuff is important to pay attention to, because we are early. Axelar also posted this. Axelar is delivering interoperability for this groundbreaking initiative, and Watcher Guru posted just in, $1.5 trillion Deutsche Bank builds a layer 2 blockchain on Ethereum, Bloomberg reports. And if we come back over here, like look at the freaking names. Deutsche Bank is right here, and they only have 2 green little dots. Okay, they don't have private crypto funds, crypto ETPs, or crypto-enabled payments yet. And Axelar just delivered interoperability for this groundbreaking initiative for Deutsche Bank building the layer 2 blockchain on Ethereum, right? Now, with that being said, you guys have been patient enough. Smash that thumbs up button and subscribe. $700 trillion is insane. It's insane. And again, so many people, because they don't have a long-term vision, understanding that this stuff is going to take time, okay? The people who are patient in this space are going to be the ones who reap the benefits, who reap the rewards of massive price appreciation of these digital assets via these natively adopted public blockchains that are about to just freaking soar. So I'm going to play about 4 or 5 video clips back to back. We have industry leading experts from Societe Generale sitting on stage, JP Morgan and many others. Listen to what they talk about in their discussions. They talk about integrating onto public blockchains when the regulatory environment is correct. And they also even directly mention Axelar on stage and having partnered and worked with them. So just take a second and listen to all these video clips real fast.
Right? And so you had entrepreneurs and technologists that they created this $2.5 trillion industry financial system, but they did it without the help of the suits of us that have experience. I'm a former traditional finance person as well, that have the experience understanding regulation, securities, that sort of thing. And I think everyone needs to work together. Now, on the question of public to private, which is what this is about, when we speak to the banks, I think you'll find out there's a lot of regulation in this space, and the banks are the most heavily regulated, that when they're looking at actually working with this technology, most of them are working with private chains. So information's not out there. They're much more protected. Private chains, depending on how you look at it, could be like a very large centralized database because they don't have the decentralization that public chains do. But banks are actually looking at, and asset managers. Asset managers have done public chains, but that's different. We'll get into purposes later. But the banks are actually, from what I hear, really looking at public chains because the future, I believe, is public.
So she just confirmed that banks are 110% looking at public blockchains. Okay, keep in mind everything I just showed you. $700 trillion derivative market, Superstate being there mentioned, Superstate on their website directly talking about how they're integrated in partnership with Axelar for interoperability on their SIC, right? Their Superstate Industry Council. Axelar directly mentioning that they work with this interoperability solution with Deutsche Bank, and then also talking about how institutions are calling. And I showed you guys the snapshot, crypto adoption by institutions, and how right now we are so exponentially early. This is from January. This is updated January 1st, 2025, people. Okay, this physically proof that right now in the moment, we are so early to the space. Continue to listen to this panel discussion. It's going to blow your mind.
With JP Morgan and Wisdom Tree and Avalanche and some others, last year we worked on something called Project Guardian, which was a private and permissioned instance of the public blockchain of Provenance. So that was a bit of a hybrid. And the beauty of working on something like that is JP Morgan ran their own nodes, meaning they controlled the network. They didn't worry about a distributed network. They actually controlled their own network, which means they controlled the tokenization, which means they controlled the fees and permissioning. So it was essentially as locked down as a centralized database. But the beauty of building in Provenance, for instance, is you can, with a touch of a button, you can use something called IBC to move over to the public mainnet at a point in the future when your regulators allow it to.
He just confirmed that they are building out the infrastructure in such a way.
With a touch of a button, you can use something called IBC to move over to the public mainnet at a point in the future when your regulators allow it to.
He also mentioned Project Guardian, which we also know from a previous panel discussion that XLR participated in this Project Guardian. Now let's listen to a JP Morgan representative confirm the migration from private to public blockchains.
And so we get the question a lot of times, like, why even do this on a blockchain network? Like, can't you just do this with a database or using like your real-time payment setup? And for us, we do see a future where a public blockchain fully realizes its potential. And so the way that we look at the world is like, let's build use cases today using this technology, using Solidity, which is Ethereum's programming language. And from time to time, we do these experiments where we can deploy what we've built onto public blockchains to ensure that we're doing it in a way that should the time come where we eventually want to migrate, we can do so in a pretty smooth manner.
Wow. Okay. He literally just confirmed that when we're ready, when the regulatory environment allows it, we can move over to a public environment. Okay. Now, take into consideration where we're at currently in the environment with crypto adoption by institutions. I played the video clips of the industry leading experts mentioning and talking about or institutions would fall behind if they do not adopt. They're putting themselves at jeopardy if they don't adopt these digital assets. And look at the freaking checks right now. Look at the green marks. No institutions have crypto-enabled payments, crypto ETPs, crypto funds, okay? All of this is coming. All of this is coming over the next consecutive couple of months / years, and it is only going to continue to rapidly grow. Now, why take this into consideration? Listen to this representative mention public blockchains running financial services.
All financial services networks, whether it's credit cards or custody banks or my old business depository banks, you have an oligopoly of providers inevitably evolves due to regulatory and compliance and interoperability. So, think about Visa, MasterCard, or BNY Mellon and Northern Trust and State Street and custody. I think we're going to wind up with a very small number of public blockchains that register, ledger, and exchange the world's financial assets. And when I say register, ledger, and exchange, it's important to think about that because the credit card networks are messaging networks. SWIFT is a messaging network. DTC is a settlement network, right? So mapping all these things, blockchains can do custodian or sort of layer 2s and layer 3s. And if you think about, TradFi, you have the credit card networks, you have the issuing banks and brokers, you have the custodians, you have the DTCs. Those are all layers of a network. But most public blockchains, if constructed in the right way, they can encompass all those functions at the layer 1 blockchain level. So it does have the ability to do away with all those intermediaries.
Do you hear what he just confirmed? And look at what Axelar just posted. That Axelar is delivering the interoperability for this groundbreaking initiative. Just in, $1.5 trillion Deutsche Bank builds layer 2 blockchain on Ethereum. Come on now, people. He just confirmed that we could do away with all those intermediaries and that a certain handful of public blockchains will run financial systems in the future. Okay? This is so massive. Last but not least, let's listen to the JP Morgan representative confirm that they worked with Axelar just so that way you can hear it directly from their mouths.
And then I would think, go ahead.
Can I add to that? So you do, because you're a bank and you're regulated and you can't work on public right now. But what are you doing in Singapore right now? You working on a public chain, or doing examples on public chains?
Yeah, I think you're referring to the Project Guardian initiative, and that kind of goes right very nicely with like the interoperability point that Annalise made. So yeah, I mean, we've explored like what it would look like to use some very crypto native interoperability protocols to connect to Anthony's network, as well as Avalanche using Layer 0 and Axelar. So we have done that work.
Wow, right? So take this video into consideration when you see FUD, when you see people fearful of this space and not understanding what is happening behind the scenes. Trillions of dollars are going to flood onto public blockchains over the next consecutive couple of years, and you do not want to miss out on this life-changing wealth because you were shaken out by some small market pullback of 20, 30, 40%, whatever the case may be in the short term. Zoom out, have a long-term perspective, and understand how early we are in this space, ladies and gentlemen. I cannot stress enough. If you enjoyed today's video breakdown, do us a favor, smash that thumbs up button, subscribe. Always showing you guys the realest information. This is not financial advice. I'm not telling you guys to go out there and buy the digital asset Axelar. I personally hold it in my portfolio, but that is because I do research on it like this, and it is proven to be something that the financial institutions are actually working with and utilizing behind the scenes, as you heard the JP Morgan representative mention on stage. Many blessings to you guys. Be cognizant, be aware. And with that being said, I will see you guys in the next video breakdown.